Oh, you guys deal with a ton of big players. Right before we were talking about that portfolio, that was a big portfolio you guys liquidated.
The Benjamin Company, we sold their whole portfolio on Long Island for about just over $200 million.
We're in Houston right now, walking our new 56-unit crazy property here. It starts down there. We got a lot of $1 billion.
Welcome back to the Talk Shop Podcast. Today we have two very special guests with us. Actually, my good friends, Mike Tuccillo and Matt Klang from the Tuccillo Group over at Marcus and Millichap. They are super hot fire brokers, awesome guys, and just stand-up guys. Guys, please introduce yourselves.
What's up, guys? I'm Matt Klang, one of the brokers for the Tuccillo Group, Marcus and Millichap. We specialize on, all asset classes throughout Nassau and Suffolk County, and I'll let the man introduce himself.
And I'm Mike Tuccillo, head up the group at Marcus Millichap, focus out on Nassau County and Suffolk County, looking to do more deals with Allon.
Oh, that's awesome.
And thanks for having us.
Oh, it's my pleasure, man. We did one deal together in Northport. That was my first North Shore deal. By the way, fantastic deal, right? And now we're trying to do multiple more. Unfortunately, we had one fall through. But
why did that fall through?
I think it was your fault.
Yeah.
If deals are dying, you're doing something right.
Yeah, I guess so. We almost just did that deal, but that was like a fire sale, and they went with the other guy, right?
Yeah, they went with somebody else.
Unfortunately.
Yeah.
So where do you guys see Long Island going in the commercial space right now?
I think every asset type is different. Some are, thriving and are achieving better pricing than ever before. And then, more on like the retail strip malls and office buildings, I think there's going to be a lot of, distressed sales and a lot of value to be picked up over the next 12 to 24 months. Multifamily and industrial buildings, we're right when we listed, we have like 10 offers instantly. That's my perspective on the market.
Where do you see industrial going?
It's just the price per square foot. Like we just sold 3 buildings at like they were about between 5,000 to 6,000 square feet. We're selling them for like $330 a foot. When I got into the business like 10 years ago, they were selling for like $80, $90 a square foot.
That's crazy.
And the buyers that are buying it are coming out of like the boroughs or, moving from retail space and, more of how like an Amazon platform and needs storage. It's just crazy.
So you see that space just getting hotter and hotter.
Yeah. That's what we've been seeing.
And why do you think there's going to be distress in retail?
Because they were closed for, 2 years. People weren't going out and shopping. But also, again, it depends on the retail, right? So, like net lease, where it was like quick service or pharmacy, those cap rates were getting very compressed, right? We were selling those in like the low 4 cap range. Yeah. But like a retail strip center, we're seeing 7, 8 caps, right? 2-3 years ago, they were in like the low 6s.
I think a big thing is after COVID, banks changed their underwriting. So your retail strips that were selling at like a 6.5 cap, all of a sudden that 6.5 was really a true 5 3/4, the way the bank is looking at it.
Yeah. With
reserves, with CapEx, vacancy management factors. And you guys are underwriting deals all the time.
Yeah.
You have to adhere to how a lender is going to be looking at a property.
So you mean to tell me that the Marcus and Millichap assumptions aren't always correct?
No comment.
He didn't say that.
I didn't say it. So I think all brokers, it's our job to portray the highest and
best use
and show what a property's potential is.
Yeah.
So yeah, we're pushing assumptions. I think every broker is. You got to be a fool not to.
Of course. Now, in the single net space, what are those key factors that people are looking for that drive like a forecast?
So a big thing is when you look at demographics, Long Island on a national scale in terms of like population density within a 3-mile radius average household income, those traffic counts, those numbers are like, miles ahead of a lot of markets in the country. So when you look at that, you see, okay, this 4 cap is not only I'm getting cash flow today, this will be viable for 20 years because of the market we have out here.
Yeah.
So I think, staying power is a big factor for these low cap rates.
And also who's the signature on the lease, right? Who's backing that lease and the term of the lease. The longer the lease, the more comfort the buyer has that it's a coupon, right? They're coupon clipping, and they're buying these, and they have a 10-year lease with Starbucks, and they think Starbucks isn't going anywhere. So
what type of buyers do you guys have in that space?
1031 buyers that are selling out of multifamily, or where we also sell some redevelopments at low cap rates, right? We sold the Burger King with like 3 years left, but it was below market rent. We sold that like a 1.8 cap.
I know who you sold that to, right?
Yeah,
Yep.
That's the Long Beach deal.
yeah, to Phillips.
Yep.
Yeah.
And they're gonna reposition it and turn that 1.8 cap into a 7 cap
They
or
did
a 10
already.
cap.
They did. I forgot what they're putting there, but I think it was like a 10.4 cap now.
Is it still Burger King still there?
No.
Or
No.
are they going to put Starbucks
Yeah.
there? Yeah, move Starbucks and give them the drive-through.
Yep. That's what they're doing. I'm pretty sure. I'm pretty sure it's Starbucks.
Yeah.
Those guys are killers.
Yep.
Oh, yeah.
They're big players.
Oh, yeah.
Right, but you guys deal with a ton of big players. Right before we were talking about that portfolio, I don't know if you want to name drop them or not, but that was a big portfolio you guys liquidated.
Yeah, the Benjamin Company, we sold their whole portfolio on Long Island for about just over $200 million.
Wow.
It was.
How long did that take you?
It was a total of 6 properties. I was speaking to them for probably about a year, and just funneling them a ton of information, and our assumptions were right? So
Yeah.
they had a lot of question marks about our assumptions, and had a lot of questions. Didn't always believe. I wouldn't say didn't believe, but they had questions of how we were getting to pricing we were. I think what separates us the most is that, we believe in Long Island. I grew up here and think it's like the greatest place in the world, right?
Yeah.
So when I'm selling it to, outside investors, you got to believe what you're selling. And we were just pushing it hard, and yeah.
Yeah, one of those deals, they did not believe us on the pricing that we were coming up with.
Really?
We were coming up like $10 million above what they thought it was worth.
Wow.
And Mike and our back office team, our analysts, did a sick job just really putting together facts to back up that valuation.
So how much did you guys get in commission on that, percentage wise?
Um,
I mean, what was the total commission? Because I know you guys have splits and all that stuff. Forget that. I'm saying what was
So each deal was different. I don't want my bank account floating around there, right?
Yeah.
So,
But it's obviously
we,
nobody can assume that because you have maybe another broker on the other side. Then
so there were brokers involved, but I think we earned a nice fee on that.
Well, like a deal that size is what, 3 points?
No, so they average, right? The most we've gotten on like a $30+ million deal is 3%. I think a lot goes into it on the process you're gonna run, and if it's how entailed the marketing is. But it can range from a point to 3 points. I've done a $5 million deal where I didn't even get a full point.
Wow.
Right? It was like an off-market
After
deal.
splits or just like straight up?
Just straight up, we did an off-market deal, brought a buyer to a deal, and the seller's like, I'm not doing this unless I get X, and the buyer's like, I'm not doing this unless I pay this price. So sometimes it's better to get something than nothing.
Of course.
So every deal is different, and how we are running the deal is a big thing. So
Making the deal happen is more important than anything else.
yeah, it's like somebody asked me what I made on the $118 million deal, and I told them I would have did the deal for free just to have it under my belt, because all the business we're getting now from leveraging that deal, just to have the experience and the knowledge of and the relationships from it, I think are more valuable than that one-time check.
It's true. When I look at you
So-
guys, I see credible brokers, you know? When I think about you guys, I'm like, these guys are credible. They know their stuff. Like, if I were to sell something for $30 million, I wouldn't want my in-house team to handle it, because you guys, I feel like, are much more equipped to do something like that. So that goes a long way.
I feel like we're the new blood out here, and I think you are too. You see, like, a lot of your competitors, a lot of your capital partners are getting up there in age and have been at it for, 30, 40, 50 years.
Yeah.
So it's fun breaking in and being the new kids on the block, but also showing, the depth of experience that we have and the underwriting capabilities.
Yeah, exactly. Well, you leverage Mike.
Of course.
You're younger, he's got more experience, he's more calm, right?
Yeah, very chill.
He's a chill guy.
Yep.
Something about the bald head that just attracts all the attention.
I thought it was the blue eyes. I didn't know it was
That too.
The combo.
The head's
Deadly
just a
combo.
lucky head. It's just a lucky head.
That too. So, are you doing any deals in the city? Because you're living there now.
Yeah, so I live in the city. I just mainly focus on Long Island. I've done, a few deals in Queens. I've never done a deal in the city.
No?
But I think that's a big thing where I fit in well with Marcus and Millichap and working in their office. They have a lot of guys that cover the grounds in Manhattan. So just being a part of that network, when they get deals out in Long Island, they bring us a deal, and it's just a good network to be a part of.
That's awesome. How long did it take you guys to sell that $200 million portfolio?
So I spoke to them. We were trying to get in there for about a year. Right when they gave us the new construction, we had an accepted offer within, 2 weeks. We closed that within 4 or 5 months. And then from that, they then started telling us they were unloading everything else. So they gave us 3 other properties they were looking to sell. And we brought them an offer right away, a lot higher than their expectations. And we closed that within 4 months of working on that. And then we got the office building, was the last one, which we should be closing within the next 2 months.
So that's like a year project. So this was your biggest year.
2021 was the biggest year.
That's awesome.
Yeah.
What are you foreshadowing for 2022?
I think we're gonna be in line with what we did last year, but with interest rates kicking up and what's going on throughout the world, I think let's see what happens. But we're still 1,000 miles per hour.
Yeah.
But I think there's this market. Who knows where it's gonna go?
I think it got fired. You had a year of just stagnant, and then a lot of pent up dry powder and capital, and obviously the available financing was, at all time lows.
Yep.
Over the last year.
If you're borrowing, under 3%, you could buy a 4 cap and make sense of it year one, right? If now interest rates, if you're borrowing at 4%, how are you going to buy a 4 cap? You're going to take interest only for the first 2 years, which is really tight margins. And interest rates were low going until the end of the year of 2021.
Yeah.
So it's still, all those deals, you still had really low interest rates. They peaked up a little bit, but by the end of the year, they were back down.
A lot of brokers are telling me they just want industrial or multifamily. They're like, the second you get industrial or multifamily, it's like sold within an instant. You already know who to call.
Yep.
1, 2, maybe 3 phone calls, and the deal's already in contract.
that's what everyone wants, but how easy is it to get your hands on it? Right?
Very
so
hard.
it's not that easy to get, quality multifamily or quality industrial.
A broker sent me a deal last night. I'm not going to name drop yet, but this guy sends me a deal last night, industrial deal. I'm like, if you send this to anyone else, we're going to have major issues. Like, I will come to your office and wreak havoc if you send this to anyone else. This is a great deal. I want it. I'm already telling you I want it. Let's just work out the terms.
Yeah.
So that was as of last night. That was an $8 million deal. Which is, mid-sized. I want something like that.
Yeah.
Industrial in Long Island.
Cash flowing, or do you guys...
Cash flowing day one.
Yeah.
Yep. I don't have to do anything.
And what are is that, how much a foot? Is it
160.
Is that like
foot.
Eastern Suffolk?
The best area you could think of.
Yeah.
Yeah.
We just sold one in Woodbury at like $210 a foot.
Yeah. This
Was
is like Plainview, Farmingdale, Melville area.
Yeah. The biggest thing with industrial, right, is also the spread between, is it how much of it's office, how much is warehouse.
Ceiling heights,
So,
power.
Yeah. This has about 5% office. 95% industrial, 16
Nice.
foot clear. With a couple acres left. Like it's, you're going in at a 5 cap.
sounds like a good deal.
Yeah, you're going in at a 5 cap, so it's like the cash flow is not fantastic day one, but if the lease expires in a couple of years, the
Long
upside's
term.
through the roof.
What have you been seeing out there? Do you think it's getting tighter inventory-wise? Like, how have the deals that you've
No.
come across been?
Total opposite. I'm getting more deal flow than ever right now. It's
Really?
actually scary because I cannot keep up with the amount of money we need to satisfy all these deals. We're actually stuck. We put our foot on the brakes a little bit because the deal flow is getting ridiculous at this point. But also, I have a 6-man deal team, acquisition team. They're really aggressive. We market a lot of, we spent a lot of money in marketing, and we're in 6 different markets. So, as expected, deals are coming in.
Yep.
And what's your outlook for 2022?
I mean, that's right now. So I think it's only going to get more and more because it wasn't this easy a year ago. So what happened all of a sudden that tons of deals are coming in? I think interest rates are rising. Sellers are getting scared that they're not going to get the same prices they were able to a year ago. And now they're starting to liquidate before something happens. That's just guess from my end. But something's happening, Like I feel the market, especially in the residential side.
Yeah, there are some shifts.
Is
There are some shifts coming.
pulling back.
I think that there's currents going in opposite directions. Obviously you just mentioned interest rates rising, but you're also seeing on the flip side inflation and rising wages, rising rents.
Yeah, it's crazy because inflation's at an all-time high, rising rents all-time high. Supply chain constraints are making building more expensive.
Yeah.
But interest rates are rising, which is a clear indicator of prices coming down. But the other 3 things we just mentioned indicate prices going up, and people are running out of money because the refinance boom is over. So
Yep.
I have no idea what's going to happen, but it's not good.
Yeah.
I've been looking, one metric that I started paying attention to is I started looking at what are the rents versus what's the average household income. Really starting to dig into the demos because a lot of people, like my friends that live in the city, are like, damn, I can't afford, how do people afford New York anymore?
Yeah.
So I'm starting to see like other markets, there's a bigger spread between cost of living and average household income. So I think that, for macro, I'm really going to look at the jobs and wages and how that starts to develop over the next few quarters.
Interesting.
For how the market's going to do.
I have a weird metric that I look at all the time. Everyone tells me you have no idea what you're doing every time I mention this, but I'm like, look, there has to be something about it. So I'm buying a multifamily in Texas right now. I'm paying $81,000 a door. The multifamily has 2-bedroom, 2-bathroom lofts, right? Awesome condition. I have some room to put in some upgrades. I'm talking like $5,000 to $10,000 a door. The houses nearby are going for $350,000.
Oh, wow.
That's what I'm looking at. Like the houses are retrading. A 3-bed, 2-bath is retrading at $350,000 a door. I'm paying $81,000 a door. The housing, let's assume the single family rental market.
That's a big metric, like with the deals we were doing, the big multifamily out here. the funds, everyone looks at the median sale price out there,
Yeah.
right? Especially a lot of all the deals we did were senior housing, right? So if they're selling out of a house for, I think out in the Suffolk, it was like 500,000. If they're selling out of a house for 500,000, right, can they come and pay, 2,500 in rent? Right?
Yeah.
And they don't have to deal with the upkeep. So that's a big thing they look at is the median house sale price. And then what's the mortgage payment, right? So like what makes more sense.
Yeah.
And the ability of getting up and being able to leave, right, with renting. So that's definitely a big thing to look at. And then just the rent per square foot, right? How big is the unit?
Yeah.
Is a big thing to look at. Is the average.
What is the average rent per foot in Long Island?
So on multifamily.
Yeah. The stuff that you guys were selling.
So the stuff we were selling was around $3 a foot.
Oh my God, it's a lot.
It was $3 a foot, and the one we were working on out in Port Jeff, they were getting, in like the low twos. So we were able to show it was below what we anticipated some of the comps around were getting.
Makes sense.
And that's why I traded a sub 4 cap. And then they look at condo sales, co-op sales, right? There's a lot of co-ops out here.
Yeah.
So you look at what those are trading for. The way I like, biggest thing is also, price for the land in the building, right? At the end of the day, the tenant come and go. So I like to always look at just like the value of a building and the land.
Are you investing in real estate?
I've bought small, like 2 families and stuff like that.
You still have them?
I do. I still have them.
Long Island?
Long Island,
Nice.
North Shore, close to where I grew up.
Cool.
Yeah.
What about you, Klang?
Not yet.
You gotta get.
I gotta put some equity in.
Yeah, into Avgi. Eventually, you'll start diversifying.
Yeah, I'm waiting for you guys to open the platform up.
Every time I'm so close to opening the platform up, it's like big equity investor. He's like, "Why do you need that? I got $4 million for you." I'm like, "Great," So I wanna.
So when you bring people in, is it sometimes they just they don't want like a big group? Is it more of just more?
Yeah,
of
what's
an intimate...
the process you run for capital raising?
That's most of my challenges right now. Like I have people that want to invest with me, but my other partners or some new partners just have substantially more money and don't want other partners. I know you. I want to work with you. It's like old school, cut and dry. No need to syndicate. I don't know these people. I've got $3 million. Let's do something. And it gives me more freedom.
Yeah.
It also hinders scale.
Less people to answer to.
Exactly. It hinders scale though. I'd like to raise $100 million, and do
2s and 20s.
Yeah. But instead, yeah, exactly. 2s and 20s. But instead I get 50% of the upside and I take one-off investors and basically become their real estate division. Like that guy I was telling you about. That I won his challenge. We started in single families. Now we're doing a new development. And I want to diversify him into commercial, but he's a little skeptical of the market right now. Probably because the stock market tanked and these people, everybody I work with usually has a fortune in the stock market.
It's just all signs of, right, the 5-year was more expensive than the 30-year. Right? That hasn't happened since 06, right? 06 was the height of the market, then 07 came, and then 08 came, right? So like real estate, it's not tomorrow, right? It's 6, 8, 12 months down the road.
And I think it's interesting.
Look at.
We actually did see a brief yield curve inversion in 2019. And in 2020, a lot of people were waiting for, a harbinger for, another sign. But then obviously COVID hit and changed the narrative entirely. So I think it'll be interesting to see how it plays out, in the capital market side of things the next few months.
Yeah, not that we care. I mean, we care, but we want to
Gotta keep going.
That's it. It's all irrelevant. We just want to do
assets
deals.
under management.
It's even like when COVID hit, right? We had like 11 deals blow up, right? We only were able to get like 3 or 4 of them done by like the summer of 2020. And then it's just like, all right, this is what you have now, right? And what do the banks want to do? What do the investors want to do? And it's just like, just pivot. It's just like, I think in every market, you're going to make money. It's just like, all right, the world's ending right now, but no, it's not.
Yeah.
This guy's want to do this. That guy's want to do this. Let's make a deal.
When COVID hit, I begged my investors to invest with me more money so I could buy industrial at the time. I didn't get anything industrial until this year, unfortunately. But when COVID hit, I had properties at $80 a foot. I had a 32,000 square foot building in Bayshore at $100 a foot with 18-foot ceilings.
Yeah.
One of my favorite quotes is Warren Buffett. When other people are greedy, be fearful. When other people are fearful, be greedy.
Yeah.
So that's like that was the perfect time. Some of our clients made the best purchases, of their whole cycle.
Yeah. And
during COVID.
I begged them, and they're like, what do you know? You've never been through a cycle. We've been through 08. We've been through the 90s. You don't get it. I'm like, maybe I don't get it, but like all the indicators are pointing at industrial. Forget single family, forget multis. Like, we buy those anyway.
Right.
Like, industrial's going to explode, I'm telling
Single
you.
family is through the roof. Right?
Yeah.
If you bought something 3 years ago, you're like doubling your money.
Well, in the end, all my investors are like, single family, just double down on that. But the lending was impossible when COVID hit on single family.
Right.
So I did, though. We bought cash. I bought 13 properties in 2020. That was my biggest year to that date. Then 2021 was much bigger when everyone was catching on that prices are going through the roof.
Oh.
April of 2020, I closed on 3 acres in the Hamptons at 1.5. Fast forward 3 months later, we got offered $3 million for the same piece.
Wow.
So it was like, and man, I pulled teeth to get that deal done. It was a tree farm. I pulled teeth to get that deal done.
Yeah, and you're still going, right?
Still going, yeah. But we're building there 16 houses.
Oh, nice.
So that's going from a $3 million. That's going from an all-in $2.5 million in equity deal to a $20 million development.
Wow.
Also, what's really hot right now is self-storage, right? That's like everyone's building self-storage. We're working on one in New Hyde Park, and the offers we're
That's
getting...
a big one. I saw that.
Yeah, it's right by the train station. It's like about 40,000 square feet, and it's just like the amount of interest we have in it is just crazy.
How big is it?
40,000 square
I
feet.
thought you could build much more than that.
So it depends if you're going to include the basement, right? If you include the basement, you're going to get to like 55,000 square feet.
I thought it was like 400,000 square feet.
No.
That would be nice.
That would be really nice. I want a 400,000.
What a lot of these guys look for is the saturation of the market. Again, you have so many people on Long Island that the self-storage supply can't keep up with the demand. And you constantly have people, moving from a single-family home to multi or moving out of state. And also now people coming back to New York. So there's just a constant flow. And that's like the lowest vacancy rate of any asset class right now.
Yeah,
Self-storage.
I'm buying 9 industrial condos right now, 54,000 square feet. Guess how much per foot? $117 a foot.
All right, that's good.
Nice.
Stolen. Great deal.
How's the condition of them? Do you have to put money into
Horrible. Yeah. I mean, 6 of them are perfect. The other 3 are, you're talking about like full guts, and new roofs
So it's
across
like
the
the
board.
cost to build an industrial building, right? Don't quote me on it, but it's right. It's like storage is the cheapest, then industrial, right, and then you got retail, and then you got multifamily, office, right? So it's like, how much does it cost to build quality multifamily? A few months back it was like $330. Now people are telling me, if it's high end finishes, right, it could be as much as $500 a square foot.
Really? That's what people are telling you? It's a lot of money.
Yeah, so lumber went up like 30%.
Even more.
So it's like, looking at older product, if you're able to pick it up for $300 a square foot, put $25,000 in a door, right? So it's like, it's a lot of the guys that I speak to look at like the price per pound, right? It's like
Replacement value.
Replacement value.
Can't build some of the buildings we sell, you couldn't buy raw land and build that building for the price that we're marketing stuff for.
Yeah.
We're less than replacement value.
If I'm putting in 30 a foot on 20,000 square feet, and blended average, I'm in for like 130 a foot.
Yeah.
I mean,
it's doing well, right? And what are the rents? I think we pulled the industrial average for like Western Suffolk was like $15 to $16, right?
No way. That's more than I thought. That's awesome.
So like,
I think a lot of it is the trickle out from Brooklyn and Queens because the industrial rents there have gone through the roof.
You guys want to lease the buildings out?
I don't really like to do leasing.
He's like, no, I need $200 million portfolio. Don't bring me anything less than that.
I'll do it. It matters what it is, right? If it's
do we get to put a big sign up with our faces?
Value of time, right, is the biggest thing.
Yeah.
If I think we can lease it quick, and there's gonna be a lot of activity, and not so much. It's just all about manpower, right? So.
Then I'm buying another building, 12,000 square feet in Bohemia, for 1.8.
Nice.
It's around 160 a foot. It's been a mess of a deal, environmental issues, everything. I'm going to be all in there for like 170 a foot, but all the neighbors are selling at 225.
Yeah.
Yeah, but see, the thing with that is the people paying over the 200, they're putting their business in there. So they're like, if I'm going to have my business here for 20, 30 years, hopefully this thing's worth at least, is going to appreciate over time. On the investment side, right, if you're going to get $16 a foot, right, and your expenses per square foot are, I don't know what taxes out there are, probably like $3.50 to $4 a foot. Say your expenses are $5 to $7 a foot, so you're netting around $9 a foot. $9 a foot on 10,000 square feet is 90,000.
Yeah.
Right. So what kind of yield do you want for that?
Yeah, that's like a 5 cap. Although that's not what I'm projecting, but yeah. I mean, I'm in contract.
But it's a bigger building, right?
Yeah, it's 12,000.
12,000. So it'd be like 120.
20,000,
give or take. Yeah, I think my net's going to be around 120. Yeah, right on.
Yeah.
So hypothetically, I mean, right now we word of mouth. We're telling people 14 a foot, triple net. So
industrial, we sold a building out in Middle Island, Rocky Point Road. It was 50,000 square feet, and we sold it for like $115 a foot. This was back in
2019, 18.
Yeah, 2018. But what was good about this building was it was chopped up into little spaces, right? So if you have a bunch of 1,500 square foot spaces,
who bought it?
Dorf.
Yeah, I knew it.
Steven
Dorf. I knew it. So what were you saying?
So if you're chopping it up, right, your average rent from the 15 to $16 a foot, right? Could you push it to 20? Could you push, right? So it's like, it's all about how the building's broken up. The smaller the spaces, the more you can push it.
That guy buys everything that's cut up into small pieces.
He likes the small spaces because you could push the rents.
Do you know him well?
Yeah, I know him. I've done a deal with him. I speak to him from time to time.
Where does his money come from?
That's a great question. Family and friends, I believe.
Got it.
He's a property manager. Dorf Associates, right, is his family.
Nice guy. I've spoken to him once.
Great guy. He was a pleasure to deal with. We had a very tough seller, and he made it happen. So it was good to work with him.
Yeah. I mean, when you get something you want, you make it happen.
Yep. Exactly.
Colliers International, whatever their brokerage is called, they're doing a deal with me right now, and I just released $100,000 of escrow, the down payment. I just released it to the seller to get an extension.
Is that an industrial building about?
Mm-hmm. Yeah. And they're like so happy with the fact that I did that in order to make the deal happen. They're like flooding my inbox with off-market deals right now.
That's the biggest thing as us as brokers. We want a comfort level that we're going to do the deal, right? There's people out there that will, do not make it so easy.
Yeah.
So once you get somebody that's going to close,
surety of close goes a long way.
Thing.
Yeah, for sure. I see you guys transitioning more into the investment side over time. You're great brokers, but you'll be putting your money in the business heavy with time. Because
I think, we're young. I'm leveraging the time I'm spending now to learn and earn, and a lot of emphasis on the former, on learning.
How old are you, Klang?
I'm 28.
28?
Yeah.
How old are you?
30.
30.
30.
Got it. What were you going to say?
And how old are you?
26. Yeah, I started as an agent.
Did you?
I mean, I did one deal
Okay.
to start. I usually do like one deal a year for a friend, just like, that I'm not even involved in. But they just like, you gotta handle this. Like, pick the attorney. I'm like, okay. So I pick the attorney. I get like 2 points.
And help them get it done.
Yeah, and just like guide them a little bit as a friend. It's mostly only my investors.
Mm-hmm.
I found that. Do you know Rob Muchnick? The
No.
Metro Group. Great friend of mine. He's like my
Metro Realty?
yeah.
They're like the white, green signs?
No, not them.
Not Metro Realty Services.
No, not them. This is Metro Group. Him and his dad built 2,000 homes in Long Island and
Okay.
thousands of units in multifamily. His father since passed, and they sold a lot of it to Fairfield.
Mm-hmm.
Just like no brokers, just them. He does a lot of land use, new development stuff. Like he's got 600 units under development right now.
Awesome.
On Long
Yeah.
Island?
Between Long Island and upstate New York.
Oh, nice.
When his dad died, we were great friends, and he transitioned from building himself to the land use stuff and selling with approvals or doing affordable housing where a big player comes in and builds. One of those deals was 18 houses. It was 20 houses in Bohemia. And at the time, I'm just getting started in real estate. I'm like, I need to do this. Like, there's $5 million in upside. I'm like, this is money. I want to be part of this. And I tried to figure out how to buy it. He gave me all the time I needed, and I couldn't figure it out. I was 20 at the time. So I'm like, you know what? I'll sell it, I guess. I'll try and make something out of it because I know the property inside and out right now. So long story short, I connected somebody with somebody else, and it led to this builder. His name was George. He's a big builder on Long Island. And he bought it, but the only way I could get my commission was if I get licensed. So I got licensed. I parked it at Exit Realty.
Okay.
And I just didn't know any better. I worked with Chris Mayer and Larry Denson, if you guys know them. Great guys. They've since switched over to this other place, Island Associates or something. And that was my first real estate deal. So I made like 30 grand in commission or something on the $2 million deal. I'm like, this is bullshit.
Yeah.
There's $5 million in upside. How did I only make 30? So I moved on after that and learned a little bit about commercial, then did my first house, and it spiraled from there. Yeah, but the brokerage side really helped me, because when I ran out of money and I was swiping my credit card to buy houses, I did a deal. I sold a building to a nonprofit.
Okay.
It was one of Peter was the partner in the building, so he let me do it. He let me collect 5 points on that deal, and I needed that. It paid off my entire credit card, and I could breathe again.
Yeah.
So those kicks, really are helpful. And some brokers make a fortune, like the Alexander brothers. You know them?
Yeah, the luxury, New York City, Miami.
Yeah, this guy made like $20 million apparently last year in fees after their splits with Douglas and Allon.
I believe it.
It's nice.
Yeah.
So when did you start to transition over from, looking at the smaller deals, the resi side, over to commercial?
This year, it's gotten bigger and bigger. I've always tried to go bigger. Always. Since the day I've started, I always just want to scale and go bigger. But you hit those ceilings.
Well, the Instagram bio, 1 billion by 30.
Yeah, that's the goal. If I want to get there, I need to do a lot more than I'm doing right now.
Mm-hmm.
But it's like the economies of scale grow over time with more people. Like now I'm scaling.
Mm-hmm.
2 years ago, I had 1 employee. It was my first hire. She helped me with the property management. So I learned the business, and then I hire around what I learn and create processes, bring on another person. The content team. I've got a 4-man content team now. A year ago, it was 1 person. That person left me, I was stranded for 3 months. Now that'll never happen to me again, because there's 4 of them.
Yeah.
What's the biggest growing pain, you would say?
Money. That's it for me right now. There's a lot of money out there. Don't get me wrong.
Mm-hmm.
And I'm aggressive, so there's never going to be enough money for what I want. The thing is, I don't have family ties. You know, I don't have that background. I don't know those people yet where I could just put together a fund and raise $100 million. It's almost easy for kids that come from, you know, really deep-pocketed families. They can make a few phone calls, an institutional investor hops in, they trust each other, they've been growing up together, and they could raise $25 million like that. You know, for me, it's like pulling teeth. Nobody knows me yet. Hence, the social media builds my credibility.
Right.
You know, I'm not going anywhere. I invite guests on my podcast. I do real deals. What's the worst that happens? The deal doesn't make as much as we expect. You know, I've never lost. I mean, have I lost? No, I don't think I've ever lost because everything's long-term. You know?
Yep.
But actually, I did. I did just lose on a deal, my down payment. I lost $40,000. But that was mine, not my investors. So the deal didn't make sense, you know, after due diligence and everything. So what am I going to risk? $3 million of my investors' money or my earnest money, you know? So I took that L. They appreciated that. That's spinning us into the next deal. And that was Phillips, by the way. They were the investor on that deal.
What type of deal was it?
40 houses. Almost 40 houses. 40 units, 38 houses.
They're big into mobile homes and like RV parks.
And they've been doing that for 50 years. So they already have so many crazy assets. I mean, if you want to hear stories, those guys have stories. You know, he bought a property for $50 million that today is worth $400 million.
Over how much time?
30 years. But still,
that's a lot of money. Yeah,
it's crazy money. You don't need to do any other deals, and you have the best life ever. You know. And my assumptions were that property's worth like $600 million.
Yeah.
He's conservative. He's like just 400. You know, just 400.
That's it.
Yeah. So, anyway, where do you guys see yourselves going next? Where's the Tuccillo group going next?
Doing more deals. Adding value to our clients and adjusting to any turbulence there may be.
That was such a broader answer, Mike. What about you, Matt?
I think just continuing to do what we do, you know, put one foot in front of the other every day and trying to make stuff happen.
Yeah.
We're young and, you know, we bring a unique style, I think, compared to a lot of different brokers out here. So just continuing to be ourselves and do what we do every day.
All right. We're going to wrap up the podcast. I want to go over some deals that nobody's seen yet. Sorry, everyone. I get first go at them. Thanks for coming on, guys. This was awesome.
Thank you.
Hell yeah. That was great.
Yeah.